Welcome back to the Dividend Diplomats YouTube channel, guys. You know you're rocking with Bertha, Hart, and Lanny over here, the DD, the best dividend investing channel here on the network. And we're here to talk to you about a dividend aristocrat, soon to be dividend king, down 24%, yielding over 3% with an over 8% average dividend growth rate. Let's go, baby.
Before we do, everyone, smash that subscribe button. Look down there. If you haven't, you can still hear our voices. Just scroll down a little bit and subscribe. Give this video the thumbs up. It is all about reaching financial freedom here on this channel, everybody. We're doing it together. We're finding undervalued stocks for us to invest in and you to consider for your portfolio. And today, Lanny has found a gem of a stock for us to talk about.
Guys, it's all about finding undervalued dividend stock opportunities. We appreciate all the comments and feedback on our videos lately, as well as on our Twitter handle. If you don't, please follow us on Twitter. It'll be in the description below if you need to follow us there if you haven't already. We do appreciate all the feedback. We do make videos, as you've seen, almost weekly, sometimes based off of your feedback on dividend stocks. And guys, this is a gem. This is one that I can't even believe wasn't really on Bert or my radar.
Yeah.
And
sometimes they just slip through the cracks. Like when you have great stocks, we look for as many of them as we can, but we can't catch them all. We're not Ash Ketchum here. We can't catch every single Pokemon.
We're not Bird Ketchum. We're not Ash Beat over here.
Yeah, but that's why we love this community. We don't have to find them all ourselves. You help us out. We help you out. We help each other. That's the goal. We all want to get to financial freedom. So thank you for helping us find this stock to analyze today and possibly add to our portfolios, as you're going to find out by the end of this video what we're doing with it.
Guys, we look at the Dividend Diplomat stock screener metrics when we evaluate the stocks, focused on those three metrics that we all know and love. One is that price to earnings ratio less than the S&P 500. Two is that dividend payout ratio, preferably between 40 and 60%. We definitely love when it's under 60%. Third is a history of growing your dividends and how high or how large is that dividend growth rate. Last but not least, we will look at the dividend yield. So guys, we are diving into this 100+ billion by market cap company that's in the medical device industry. This is none other than the Dividend Aristocrat, Medtronic, ticker symbol MDT. Medtronic's right now is actually trading below $100 per share. Man. Medtronic is trading at $81.30 currently, Bert. They are down about 24% this year and down over 30% since November of 2021.
Man, and we talk about how bad the S&P 500 has performed this year. After the rebound, the S&P 500 is starting to come back. Medtronic is trailing the market, which is fantastic. And it's been hard to find some undervalued stocks the last few weeks. This one is jumping off the page at us. And as we talked about the stock price. Lanny, I just pulled up the chart right now. Medtronic is back to where they were 5 years ago. So it's insane. They've given up all the pandemic pop gains that we had. So it's great that you took the time to put the metrics together and to start talking about the earnings release and seeing what is going on with MDT.
Not to be confused with RVD, WWE style, guys. So again, they're in the medical device industry. Healthcare obviously still needs all of this equipment. And right now, based on my last earnings release, they're ahead of expectations. They're actually sticking to their guidance. A very, rarity right now in the stock market.
Yeah.
And right now, earnings and, revenue are all exceeding expectations right now. EPS is up year over year from quarter to quarter for the quarter that, recently ended for them. On top of that, they increased their dividend this year by 8% from 63 to 68 cents. And Bert, look at that balance sheet. How does that current ratio, quick ratio, long-term debt, how liquid and how nice does this company's balance sheet look right now?
Beautiful. Current ratio 1.57x, quick ratio 1.23x, current assets can easily cover current liabilities, even when you take out the inventory. That's what is sick about this company. And they're cleaning up the balance sheet even more. They're paying down their debt. Their debt is down, not 1 billion, not 2 billion, but almost $3 billion in a short period of time. That is fantastic. That is how you know a company is great, when they're managing their balance sheet and they're able to help drive those dividend gains in that cash flow year after year after year after year.
So guys, just, take a step back and really think about it. Good balance sheet, again, meeting expectations right now and exceeding them slightly on the revenue and earnings. Not even having a great year, but they're still exceeding those expectations and keeping with their guidance, setting things up, I believe, for the future, especially with the pay down of debt, opening up more cash flow and saving on that interest expense. Let's get into the dividend stock metrics, though. Again, MDT is trading at $81.30. Analyst expectations right now for the 2023 year are $5.53, Bert. A PE ratio of 14.7, which is definitely lower than the S&P 500, which is right around 20.
It's not the cheapest, but you know what? It's not always about buying the cheapest stock. It's about finding an undervalued stock compared to the S&P 500. There's a reason why Medtronic will probably never have a single-digit PE ratio like some of the other companies we've analyzed on here, because they are quality stock. It's fantastic. Their PE ratio is even below 15x. That's almost incredible for me to see here on this video, to tell you how much we respect MDT and what they've been able to do over the years.
Exactly. Now, Bert, what does that dividend payout ratio look like? That safety in the dividend.
It is their annual dividend, 272. That payout ratio is in the sweet spot of that so perfect payout ratio range of 40 to 60%. Their payout ratio is 49.19%.
Perfect. Right in that sweet spot, right in the middle. It's almost J&J-esque. Guys, like this video so far if you're liking what this dividend stock's bringing to the table.
If you are liking what it's telling you.
So let's get into the dividend growth history here. Increasing their dividend for over 44 years. Few years, a handful of years away from that dividend king status, guys. 44 years, nothing to scoff at. And they're doing it at an average dividend growth rate of not 1, not 2, not 3, but 8%.
Insanity, guys. We talk about that. That's in line with inflation this year. That's way above historical inflation, where before this year, it was on average, 2 to 3% where they typically tried to manage inflation to. This year is more of an anomaly. Medtronic's average growth rate just crushes what the historical inflation mark was.
It's a great growing passive income stream, usually keeping up with the cost of living and typically well exceeding that. And Bert, how does this combo look like, though? Do they have like a really low dividend yield, like 1%, 2%?
No, they actually don't, Lanny. That's the beauty of it. I was just making sure I read that right up here on my monitor with all the metrics on. Their dividend yield is 3.35%.
So you're looking at an 11 to 12% double-digit banger when you take in the growth rate and the yield on a drip status. How does that compare to that 5-year dividend yield average?
Well, all right. So why are we looking at this, and why are we considering that? First, if you have it, your average dividend yield is X. If the yield pops up, why does your dividend yield increase? If you look at the denominator, stock price, the stock price goes down, your yield's going to jump up. So you can look at the average, the current yield compared to the average. If it's lower, it's a sign that the stock may be overvalued compared to their average. So Medtronic, they are 1.1% over their 5-year average dividend yield. So it's another sign that Medtronic here is undervalued compared to their historical metrics.
Guys, 14 PE ratio, a 50% payout ratio, 8% dividend growth rate for over 44 years going. They're going to be a dividend king here very soon, with an above average dividend yield, 2 times the S&P 500, 1.1% over their average 5-year dividend yield. Down 30% in the last 52 weeks, $100 billion by market cap company. Is this a great stock to buy or what? I'm saying yes.
Yeah.
We don't do this often, but this is a great stock to buy.
Yes, and as we've been going through this, I've been thinking through different ways in my head of what I want to do, and I know exactly what I want to do here with Medtronic. But I'm just going to say yes, and I'm going to keep everybody in suspense for what I'm thinking for my next move here with Medtronic.
I typically don't like to add all these new positions, so I'm going to have to go through my wife's account, my account, to see if there's a way to get this dividend stock into the portfolio. Obviously do your own investment research and advice, but this seems to be a great stock to buy right now.
Yeah, and I didn't mean to jump in there. What I was going to say is if you are going to add a new position to your portfolio, you want it to be a quality dividend stock. You want it to be a company like a Medtronic that's almost a dividend king. It's like a high bar to get into the portfolio now because we have so many positions. This is the kind of profile of a company that would cross that bar because the metrics are right and because of their strong long-term dividend growth history.
Now, guys, do you own this stock in your portfolio? Let us know in the comments. Have you been buying Medtronic stock in this current market environment? Let us know. Let us know what other stocks there are to buy right now. Please share your feedback. We'd love it.
If you haven't already, subscribe to the channel. Give this video a nice big old-fashioned thumbs up. Thanks for that support, everybody. We can't wait to hear what you're doing with Medtronic.
Guys, keep buying dividend stocks. Grow that passive income stream. Let's get to financial freedom. That was Bertha Hurt and Laney from the Dividend Diplomats. Over and out.